So let's talk about insider trading. I'll discuss when it's legal, when it's illegal, and when you see somebody at a company selling shares, should you also be selling? Let's dive in. So let's talk about when insider trading is legal. Now, insider trading applies to really three, maybe four different types of people within a company. So, number one, C-level executives. You got your chief executive officer, chief operating officer, maybe chief technology officer. There could be certain people, but if you are some kind of C-level executive, that's number one. Number two would be a board of director, or you're serving on the board. Number three would be, it says here on the SEC website, anyone that holds 10% of any class of securities. So it could be, that won't be like your bigger name stocks like Apple or Microsoft. It could be a small penny stock. You could own as a single person over 10% of the securities in the company. Then you definitely have to disclose. Number four would be, it does not say this on the SEC website, but I always recommend this. If you're an employee at a company, you're not a C-level executive, you're not on the board, and you don't own 10% or more, I still recommend you talk to HR. Find out what can you do. Do you need to disclose if you're going to buy or sell shares of stock? Do you need to disclose that to the SEC? I would just double check before talking to anybody outside of the company that, hey, I'm buying shares of my own business on this date or whatever. So those are the people. Now let's talk about the rules and regulations to make this legal. And in this case, I am turning to the SEC. It's just sec.gov. There are three different forms you need to complete. You have Form 3, Form 4, and Form 5. Now, Form 3, this documents the event that you achieved insider status. So let's say you move from VP to Chief Operating Officer. You're now moving to the C-level position. Or let's say you got promoted to the board of directors. In this case, you have to fill out Form 3. And it says here, it needs to be completed within 10 days after becoming an insider. So we'll use some firm dates here. Let's say you get promoted on June 1st. By June 10th, you need to disclose to the SEC that, hey, I've just been promoted to, I'm now an insider trader within this company. Then you have Form 4. This documents when you buy or sell securities. And what you need to do is document within 2 days after making a purchase. So let's say it's June 1st, you buy, 5,000 shares in the company you work for. In this case, by June 3rd, you need to disclose to the SEC that I just, bought shares. Or if you sold shares, you need to disclose that as well. Prior to that, you cannot tell anybody outside the company. Then you get to Form 5. This is like a summary of everything that happened over the fiscal year, all the transactions. Now, with Form 4, you don't have to report anything that's less than $10,000. So let's say it's like a random Tuesday, you decide to buy $5,000 worth of shares of the company you work for. You don't have to fill out Form 4 because it's less than 10,000. But on that Form 5, you do need to summarize every single transaction, whether it's a buy or sell, no matter the price. So up until that time, you cannot tell anybody outside the company what you plan on doing or what you already did. It needs to be reported to the SEC. The big one is that Form 4, because that documents what you bought or what you sold. After that, then you can speak publicly. Now, insider trading can also be, let's say there's certain news happening within a company. You can't disclose that as well. That can be used by somebody outside the company to buy or sell. So that transitions to, when is it illegal? And I want to share a little case study here. I'm turning to Investopedia.com. This is a great website to learn about investing. And you can check out some case studies like this one here. So this talks about Martha Stewart's insider trading event in 2003. It relates to a company called I Am Clone. This is a biopharma stock. What happened was there was an upcoming event, and I will say this quick segue. Anybody who's investing in biostocks or pharma stocks, be very careful because events like this happen all the time. One government regulation can change or something can be denied and a share price can pretty much drop overnight. That's exactly what happened in this case. So there's a new drug coming out. And leading up to it, the CEO decided to sell shares. This CEO knew that something was going to happen. They were going to be declined. Well, that CEO talked to somebody at Merrill Lynch, and that person at Merrill Lynch talked to Martha Stewart. Little chain reaction here. Telephone game, you could call it. And what happened was this company was in fact denied by the FDA for a certain drug, and the share price fell 16%. But because the CEO and Martha Stewart sold before the event happened, that was breaking the law. And in circumstances like this, the fines are very steep. In fact, I just Googled what is the penalty for insider trading. It's a fine up to $5 million and prison up to 20 years. This is a big deal. So if you're working at a company, be sure you keep your mouth shut. You follow the rules of the SEC and talk to HR just to be sure. Human resources will give you the guidance to make sure you're doing things correctly. So that's the difference really between the legal side and the illegal side of insider trading. Now let's talk about, should you, let's say you see that somebody sells shares in a company, should you be selling as well? So for context here, Tykr has a lot of different data points for stocks. You can log in, click on a stock, and in many cases, you can see a lot of different information about a company. Well, we are soon adding insider trading to most stocks in the platform. And with this, I want to say that if you see shares being sold, here's a scenario that's very common. And I know this because I've had these conversations with CEOs and COOs after it's been disclosed to the SEC. So let's check this out. There's a circumstance when a C-level executive I know sold about $500,000 worth of shares. And I was like, can you tell me why you sold? And the response was, well, my daughter's going to school. And my wife was like, could we also use some of the shares we sell to pay off our house? And he was like, sure, no problem. Now, does that event relate to the performance of the company? Absolutely not. Yet, this happens all the time where people are selling shares to pay for things in their own life. The most common responses I hear are usually a child's education and, like I said, paying off a house. So, if you see somebody selling shares, don't think that they are selling for a bad reason. It could be a personal reason just to pay off something in their own life. So keep that in mind. So overall, I hope this gives you a little more context on what insider trading is, when it's legal and when it's illegal, and what you should do when you see it happening. If you want to learn more about Tykr, go to tykr.com. You can sign up for a free trial. We also have courses you can check out on Tykr edu. And 2 requests, if you like this video, go ahead, hit that like button. And if you want to see more like it, hit that subscribe button. We'll see you in the next video. Bye for now.